Good morning. The Delaware housing market continues to fluctuate left and right, and many people want to see the same things. They want to see home prices drop. They want to see homes sitting a bit longer. We want to see a buyer's market, many people do. And if you specifically are looking to buy in Delaware, relocate to Delaware, or relocate out of, not necessarily made for you, but maybe, then this video is for you because I'm going to give you the details and the data, and I'm going to tell you what it means so that you can make the appropriate moves. My name is Zachary Faust. I run a team of agents here in Delaware. Been doing this for 8.5 years. Data has been my best friend on this journey in real estate here in Delaware, running a team. It's very important to know not only what's going on accurately, but what's going to happen. And our data tells us that. So that's what I want to do for you, tell you what's about to happen in the Delaware housing market, specifically Southern Delaware. And to do that, we're walking through the Bright MLS. Now, for starters, a lot of numbers in front of us, but this is the data for Southern Delaware, the southern half. I've cut it from half of Kent County all the way down through Sussex. And if we have that area selected, we will see how many homes are listed, which we have 1,007. The listed median price for those homes that were listed was $429,000. And as of right now, if you were to count up every single home in that area that is for sale, it is 3,217 units. We're going to come back to that number because that's a very important. But moving on, we have month supply of inventory at 4.1 months. We'll come back to that. And the sold median, the actual sale price of homes in Southern Delaware, has hit a new record in June. $425,000 is the median listed. Now, this is different from average. Median is the true middle ground number, whereas average can be skewed by higher and lower priced homes that sell. The median of 425 is higher than it's ever been in 2022, 2023, 2024, and 2025. Days on market is 50, meaning the average home in Delaware, when it hits the market, is taking 50 days to receive its first offer that is accepted. Of course, it could receive other offers that go unaccepted, but that doesn't count toward this number. And that number is very interesting because it stayed stable in a market where many people think it should be going up. Let's walk through what all this means. So if we go back to units listed, we'll see I have highlighted in yellow, as well as I have 4 little dots on the months prior to show that we haven't had a 4-month span where units have been listed over 1,000 consecutively. If we look all the way back to January 2023, and I'll show you other numbers from other months in prior years later on, we'll see that there's never been back-to-back-to-back-to-back months of 1,000 plus homes getting listed. What does this mean? Well, it means 2 things. One, supply is increasing, and that can put downward pressure on pricing. And number 2, it means that more people are actively putting their homes on the market, or so it seems, because there's actually another source for some of these homes. We'll get to that in a moment. But this is a welcome sign for those that want to see lower home prices. If you want to see a Delaware home get to a lower price than that sold median of 425, you want inventory. You want what's called supply. Supply is the only thing that could actually bring prices down. See, if supply goes high, prices can die. Supply goes high, prices can die. And we are seeing that go up. Let's move over to the end of market inventory. I underlined it in red, that 3,217 number. Let's take a quick scroll down memory lane all the way to January 2023. And let's see that that number, which I've surrounded in those nice blue lines, has consistently gone up. Ever since we exited the low inventory crisis that we were going through in 2021 and 2022, we've been slowly but surely accumulating inventory. And that should be a welcome sign because, again, we can't see the price die unless we see supply high. And so the supply has been increasing. But all that to say, we just had the highest sold median price that we've ever had. So why is inventory increasing all while the price is not decreasing? Well, the answer goes back to our units listed. So if we look at that units listed number, again, we immediately think, wow, there's a lot of people selling their home. That's not necessarily the case because if we go over to the MLS, what we'll find is over 25%, the number is actually 27.8% to be exact, of those homes are new construction. They're new construction floor plans. They're new construction, ready to build when you want it. They're not necessarily actually built homes. If you're following me there, it means that they can just be planned to be built and active to get buyers. So that number is a little skewed. We don't have as many resellers on the market as maybe we would like. And so we can see a little bit more of that in our month supply of inventory because that is actually trending down. We actually don't see a world right now where inventory is staying. We start to see a world where homes are actually selling quicker than they were. Let's look at the 2 numbers that support this. If we look at the month supply of inventory from January all the way to today, we'll see that the month supply has actually dropped. We were at 5.1 exiting January into February. We're down to 4.1 as we enter the middle of summer. We look at days on market. We look at that same time frame. We went from 61 days was the average time to get a home sold. Now it's 50. So what's going on? Homes are selling quicker, inventory's accumulating, and rates are high. So typically people aren't buying as much. So what's happening in the Southern Delaware market? Well, to learn a little bit more, let's go down to the bottom box. The current month of July 2025, the current inventory is 3,191 homes. Stop. The inventory is 3,191 homes, but if we go back to June, we see it was 3,217. What does that mean? It means it's dropping. It means we might have finally hit the peak of inventory. We might have finally hit the top of the inventory market. That number has gotten to about 4,000 at max, and that was like 2013, 2014. The number we're seeing today is much higher than typical. Pre-COVID numbers, we were not at these numbers. Our inventory is way higher. What's happening is I believe we have hit the peak of pricing, at least for the summer, in Delaware. Here's why. If we look at the sold median at 425, that is when the home actually makes it to the closing table, and that usually takes 2 to 3 months. So if we go to the listed median, which is the median price that a home actually lists on the market for, we can see that that number is always higher than the sold median. Reason being, most people, when they put their homes on the market, anticipate getting more than what they actually end up getting. That's pretty consistent and typical in the real estate market. And if we look at the listed median 2-3 months ago, back in April, we'll see that it was 450. That was one of the highest listed medians that we'd ever seen. 2-3 months later, we see one of the highest sold medians that we've ever seen. So what this tells us is we can look at this listed median and we can kind of foresee what's going to happen in the sold pricing. So what's more than likely going to happen is our day on market as we exit summer will more than likely stay in or around 50. Our median sold price will more than likely drop to about 412, 415K. I could see a 5 to 10% drop here. And the month supply of inventory will more than likely start to trickle up because there are less buyers in the market. We have exited the peak of the summer market here in Delaware, where August and September and October, it tends to settle down, chill out a bit. We're more than likely going to see home prices drop, and that's a welcome sign for anyone looking to buy. But when do you buy and where do you buy is the next question. I want to bring up another document so we can bring up some more numbers. Now, this document, and I'm sorry ahead of time if you're not a big fan of numbers like your guy. I'm a nerd. I love numbers. If you look at these numbers, they tell a similar story, but I want to point out some key facts here because this document is pre-COVID. This starts at January 2020, which was when we were really starting to see our market shift. People were starting to not put their homes on the market. The threat of COVID from China was real. I believe December that prior year, 2019, we had our first case. If we look at where I highlighted in orange, let's start there at the top, end of market inventory, you can see that we were trending lower and lower and lower and lower all the way up till COVID. But where were we at before that? We were not at 3,000. We weren't even at 2,000. We were in that 1,800, 1,900-ish range, and that's where we lived. We were always in that range. Homes hit the market, homes sold, and let's look at how long they took to sell. If we look at the day on market in purple, they took 79 days, 86 days, 100 days to actually sell on average. And if you look at the column right next to it, you'll see the sold medians were so much lower. Where we just saw a sold median of 425,000, home prices were 256, 270, 240, 234, I think I'm seeing right there in January 2018. So if you look at the median sold price amongst this time frame, it was 255,000, and the average amount of homes that went pending every single month was about 657. Compare that to today, where the median sold price is closer to 400,000, and the average pending is lower. It doesn't make a lot of sense, because why were homes selling for less and taking longer and selling more often? Whereas today, they're not selling as often, they're selling at a higher price, and they're selling quicker. What's going on? What we're seeing here is this three-headed monster. We all want lower prices, right? We want a lower priced home to be able to move into. And we all want lower rates. We want a lower mortgage rate. We want a lower mortgage monthly. And that's just everybody. Nobody wants to pay more. And so Delaware has this very interesting catch-22 where just because rates are higher and just because prices are higher doesn't necessarily mean that the market stays stagnant. Why? Because we are a high demand market. The three-headed monster Delaware has is new construction, high rates, high demand. New construction makes up more than 27% of our entire inventory, meaning if you're not looking to spend on median about $450,000 to $500,000, you're immediately out. You can't afford a new construction home in Delaware. If you're looking in Delaware and looking for resale, you're not going to see nearly as many as you might like to see because not as many people are selling. Why? High rates. You may think, why would someone selling worry about rates? Well, for the exact reason maybe you looking to relocate to Delaware would think about them. You have to buy another house. You have to go somewhere else. And so the high rates of today would mean a much higher mortgage payment than what they probably have right now. So with these higher rates, we're seeing less resellers hit the market. And again, a larger share of new construction properties that are on the market. And the third is high demand. Let me put it this way. If you were coming from West Virginia, Alabama, Mississippi, MISSI, and you had to pay your mortgage, you would probably be at a $1,600, $1,700 a month range because you could still get a home there for $220, $240, $260, $280. It's very achievable. In Delaware, if you were coming from, let's say, New Jersey, Pennsylvania, New York, Connecticut, Maine, shout out Cape Cod, Providence, Rhode Island, if you're coming from any of these areas, you view Delaware the same way that Delaware would view Mississippi. You would view Delaware with $400,000 prices, or many people coming into Delaware view those $400,000 prices as a discount. They don't have to pay the $10,000 a year in property taxes like they pay in Southern Jersey. They don't have to pay the obnoxious prices for Manhattan or all of these other areas in the Northeast. And Delaware is becoming this like perfect migration option for people to not only retire to, but simply just relocate to and not spend as much money. That's why we're seeing days on market trend lower than pre-COVID because homes aren't sitting as long. Why? We don't have as much resale inventory as we need. What does that mean? It means we have buyers ready to go and homes that simply aren't hitting the market that they want to go with. And when that right home does hit, it sells fast. If the home's priced well and walkthroughs, and the walkthrough is pretty, like, you walk through, see the kitchen, everything is nice and in order. There's no clothes everywhere. Paint's up to date. Carpet's not ripped up. It sells. And to show you that, let me show you this. So if we look at this competitive market report, which I've specifically set only for fee simple ownership, so this excludes condos, land leases, and you'll notice that drops the current active competitors number from over that 3,000 mark to now 2,589. But then what I like about this report is it details out how many homes are on the market within a specific day on market range. How many homes are on the market that have only been on for less than 45 days, 46 to 90, and 91 days plus. As we can see this document, if we look at the orange, we'll see just about 40% of the homes on the market today were listed in the last month and a half. That's pretty healthy. It's pretty normal. But what's not pretty healthy and not pretty normal is the plus 91 days. Almost the same amount, just under that 40% marker, are homes that are stagnant. They're stale. They're not going anywhere. If they've been on for 91 plus days and they haven't sold, they're not selling at the price they're being sold at. That's just how it works. It's going to go for 5, 10% less, severe seller concessions, or it might even come off the market altogether. And if we look at that number that I've highlighted in yellow, 66, that's exactly what that is. Homes falling off the market. They didn't sell. They were expired or they withdrew. That 66 number is very interesting because and I'll tell you why. The week of June 26th to July 2nd, there were 66 homes that expired or withdrew from the MLS. I want you to take a quick guess as to how many homes expired or withdrew in all of 2023. The number was 64. So in 1 week here in 2025, we had more homes that fell off the market than an entire year. Why is that? Well, We had low rates at a time. We had prices that were good at a time. And even look, I bet if you looked at 2022 and 2021, I don't have the numbers in front of me, the number was even less. Homes weren't expiring off the market. Now they are, because people want more for their home than probably what it's worth. And people are waiting for the right home. And when it hits, it goes quick. But if not, it sits. It either hits or it sits. That's going to be our phrase. The other yellow section I've marked here is average appointments before contract. This is very important. For your knowledge, that number pre-COVID was 7. The average amount of appointments that a listing would have, a new home that hit the market would have, would be around 7, meaning 7 pre-qualified buyers would walk through the home, through an open house, private tour, and see it. And there was 7 that would happen before they would inevitably get an offer and a contract. Remember, the days on market then was upwards of 100 days on average. Now it's 2.19. Even though that's lower, I'm going to show you another stat that gives some credence toward maybe home prices are on the way down. Now, 2 signals that I always look for in whether or not our housing market has high demand, low demand, is how many appointments are actually happening per listing and how many agents are actively showing them. I've highlighted 2 numbers here, 1.95 and 497. The 1.95 is the average appointments per listing. At 1.95, this number is actually trending below the average appointments needed to get a contract. So hear me, even though these numbers are much lower than they used to be, these numbers used to be well above the 5, 6, 7 markers, it usually trended above the average appointments per listing, the number of appointments it took to get a contract. And so now that number is trending below it, meaning homes are going to sit a bit longer. We might see inventory accumulate, even though other numbers might show that we're going to start losing inventory. One thing remains certain. Demand is lower than what's needed to get homes under contract, which does mean more than likely we'll see homes come down off that 425 sold median as we exit summer, as we get into the fall. I believe we could see home prices get into the high 300s again. The other number that really showcases demand in a market is how many agents are actively working in it. So just to give you a quick update on how realtors work, we typically, in any given state, 70% of us are active. 70% of real estate agents with a realtor license are actively looking to work full-time and trying to buy or sell homes. Like I said, I've been doing that for 8.5 years, and I've seen this number trend up and down. It's been upwards of 2,000, 1,500, 2,500 within a given week. And what this tells us, agents showing competitors only. This is agents showing homes. We have an app called Showing Time that logs any time a showing's happening, and this is that number. 497 agents actively working in Southern Delaware when there are 4,400, I believe the actual number is 4,420 agents that work in that area. That means almost less than 10% are actively working. It's somewhere in that 12, 13% range are actively working. 12 to 13% of active realtors in Southern Delaware are actively showing competitors' homes in that area. That is low. That is low, ladies and gentlemen. And here's what that can tell us in the numbers. It can tell us right away that agents are getting called less, texted less, emailed less. Here's my number that you could call, text, or email right now if you wanted to, just to test the theory. But they're getting called, texted, and emailed less because buyers are less interested in going and seeing homes. So when we see the average appointments is trending lower, the average agent showing homes is trending lower, all while home prices are trending at the highest price they've ever been, that leans toward the direction of we've seen a peak. Home prices could come down for a time, especially as we exit the hot summer market. And I'm going to get you to an exact number. I've thrown the high 300s, but I have a number written down here of where I think prices will be by the end of the year. So if you're looking to buy here in Delaware, you're looking to sell here in Delaware, I have 2 very distinct action plans for you. If you're looking to sell, what I can tell you right now is, especially if your home is worth under $450,000, your home is needed. Inventory of affordable housing in Delaware is it still near all-time lows. You can't find a townhome that isn't $350,000 or more in areas of even like Millville and Selbyville and Gunsboro. No love lost to those areas, but they're selling like they're beach towns now. It's crazy to see the home prices that have gone up. So if you're thinking of selling, if it's priced well and ready to walk through and it's nice, it will sell, and it'll more than likely sell in the first few weeks, if not within the first month and a half, 45 days being the DOM average we've seen for the past couple of years. If you're looking to buy, well, there's three things that we can immediately look at to know when it is a good time to buy. We look at prices, we look at inventory, we look at rates. We look at prices, we seem to be in a stable price range. If you look all the way back to beginning of 2023 and beyond, we've stuck around in this high 300s, low 400s number. We've bounced back and forth a couple times. It seems to be a place that we're going to stay. And you may hear me say that and think, wait, Zach, prices aren't going to come down? No, I don't honestly think home prices go back to the levels we saw in the other documents of 250, 260, 270, even 239, I think was on there. We're not seeing those numbers ever come back. Just being very honest and real with you, because the numbers don't support it. We would need 10,000 homes on the market with rates still in the 6-7% range to keep demand back. And only then would we maybe start to see pressure that would push down to 20-30% drops in price. Right now, what I see is we have about 3 to 5% worth of pressure going into the fall and winter times that will lead us into a sold median price, I believe, that will get back into the high 300s. Meaning, if you're looking to buy in Delaware, usually seasonality-wise, the best time to look is October, November, and December. It's the most affordable quarter of our entire year. Reason being, we have beach homes that have been bought and sold and are ready to be winterized, and we also have people that are in schools now rocking and rolling, and people tend to around the holidays also just chill out on major wealth moves, major money moves. So October through December, really good time. That's when we'll probably see home prices come to the lowest. Now, let me double that down with the other item within our site. We talked about inventory, we talked about prices, rates. If you're looking at mortgage rates and thinking, when could I get the best opportunity to buy a home based off rates? I got no good news to tell you. I follow Jerome Powell in the Federal Reserve on a month-to-month basis to see what's going on with the Fed rate, the 10-year Treasury yield, how it's going to affect the 30-year mortgage. And to be honest with you, there's no data that is going to lean towards lower rates. As we sit at about 6.8% today, we aren't going to probably get into the fives, if not this year, even next year. Why? Unemployment stays low. Inflation stays moderate. And if as long as those things stay true, we're not going to see lower mortgage rates. I would love to see lower mortgage rates. Like, everybody wants lower mortgage rates, but they only happen when our economy demands it. And our economy doesn't demand it right now. Right now, inflation's trending high. They don't want to raise rates or lower rates because of that. And unemployment's low. And they don't want to lower rates because why would you? So as long as rates remain high, and we don't see a surplus of resellers hitting the market, real people looking to sell their home in Southern Delaware, what I can tell you is prices will more than likely stay stable, if not drop just a tad bit into the high 300s as we exit 2025 in these last two quarters. The main items you're going to want to keep an eye on from the outside looking in is a surplus in new inventory hitting if you're on loftteamde.com or Zillow or Redfin or Realtor or all those other subpar sites to ours that are showing you what's hitting the market. You want to see more homes hitting, especially homes that are below 500,000. Why? Because that is a in-demand market that would really help benefit and stimulate home prices and home price growth in our area if we could actually get homeowners in the homes that they could afford. The other item that you can keep tabs on is rates. If you go to dailymortgagenews.com or even your bank, probably Bankrate, Quicken Loans, all of them, they track mortgage rates. You want to see that number trend down to get to a more affordable monthly payment. Right now, again, we're in the high sixes. I do expect us to get into the low sixes by the end of the year. But if you're sitting and waiting for 3%, 4% mortgages before you make your move to Delaware, let me just let you know right now, we could probably do this deal with a carrier pigeon and do it over like maybe 4 or 5 years. And we're probably still not going to be to a point where that's going to be true. So if you want to buy and you're waiting for the right time, I don't want you to see this market increase in price while you're waiting to get a better deal, because more than likely the deals are today. The deals are yesterday. As we looked from 2018 to 2020, the deals were 5 years ago. The deals are today. The deal of 2027 is happening today. So as much as these prices are higher than many people would like, as much as mortgage rates are pushing a lot of people from closing the deal, we can see that people are actively buying and selling. Homes are selling for high prices. They're selling quicker than historically. And we even have a higher supply, even though a lot of it's new construction, than pre-COVID. So I would say with about 5 years of evidence post-COVID that these prices are here to stay. We're going to see a little bit of downward pressure as we exit the year, but ultimately stable conditions here in Southern Delaware. And if you're looking to buy or sell here in Southern Delaware and you want to continue to stay up to date on what's happening, when you should buy, when you should sell, when you should invest, this channel's for you. Appreciate you. Have a great one. Talk to you soon.